Ugh, now I'm gonna have that stuck in my head this whole time. Yeah, that's like non-stop. There was a song in middle school that this tuba player kid would play all the time. Oh, dun 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 dun. Same, right? Snoop Dogg or something. Over and over and over and over. I'm like, yeah, pick a different note, man. Learn something new. Hey, welcome to the closing beat, everybody. Happy Monday. How we doing out there? What are we doing over here? We're in the wrong section, actually. Hi. So this is the closing beat stock market update show. We do all kinds of good stuff coming at you here today and this week because we got a really busy week as far as earnings go. So we will dive into it. Also, every week we do a class for our clients. It's called Wine and Wealth. Come hang out over in a speakeasy there. And last week we talked about the portfolio updates, position updates, and we got a whole lot more geeky stuff coming your way for things like that. We like to teach why are we doing things, right? It's like sitting next to a mutual fund manager. Why are they making those decisions and why do they benefit me or hurt me, right? So we're going over those things there. Our research site, if you want to join us, jazzwealth.com/research. It's $13 a month if you want to join us. Helps us continue to grow here. Yeah, $13. It helps us a lot. We've got lessons on earnings stats there. We published the trading strategy, Wine and Wealth class that we did. That's for clients there. We did a breakdown of the transportation sector and how you, or industry, and how you can kind of see or break it into pieces and understand what's moving that industry there if you're interested. So check that one out for sure. If you look at the stock market off to the right-hand side, hey, we got earnings season going on here, and it's just getting started, man. Just getting started. We got 234 names reporting today. Did a FinTips video for you that is live. It's actually live now. Went over all the stats of all the big name earnings this week, a ton of them actually. So if you want to check that out or just have an idea of what's going on there, you can do that. A great example would be Coca-Cola. Let's go over to Coca-Cola real quick. It did pretty much exactly what it does on earnings day there, where it tends to gap up, fade throughout the day, and actually today it finished a little bit positive there. Their earnings, by the way, they said they were going to have to raise prices because of their commodity issue in 2022 as well. So inflation, right? Get a little inflation going on there. It's coming. Get ready for it. Anyways, the stock market off to the right-hand side of your screen, you can see down day today. We actually pulled back a little bit. Let's take a look and see what we've got here. So if you look at the stock market, just a touch lower after being at all-time highs. Maybe this is the start of a pullback, maybe not. If we look at the Dow first, that one held up the best throughout the day today. It's up 11% year to date, and Boeing was your biggest drag on that one. That one continues to pull back ever so slightly to the 50-period moving average. So let's try this. I'm going to go back here and then just pop over and see if it zooms in. No, I don't know why. You got all this mess over here still messing with our chart. So if we just zoom in a little bit, you can see that pullback to the 50-day moving average and prior price support there. So that was your biggest drag, but kind of an attractive drag there, most people would argue. If you look at the NASDAQ there today, it's up 8% year to date. But today, you got Tesla dragging you down, lost $25 on the day. Amazon also pulling back just a little bit, but $27. And NVIDIA had some issues overseas with their ARM getting some, maybe a little scrutiny over their ARM acquisition. $40 billion, that'll grab a little attention there. So those were the ones that held you back there. If you look at the FANG names, Netflix actually did its job, right? The FANG stocks were giving you a little bit of a rally. Netflix didn't participate as much, doing its job to participate now. Facebook's starting to pull back a little bit. Not a big deal, I think, overall, but a little bit of a pullback overall for a lot of the stocks, and it's welcome, right? You guys all welcome the pullback, not a big deal. For the S&P 500, we just pulled back slightly off of those highs there. 90% of stocks are now officially over their 50-day moving average. It's a little bit higher as of today. I covered this in our Notes from Jazz email, not to like market this or anything, but if you're one of our clients, it's in the dojo. It's archived as well. Every week I send out an email. And one of the things that we talked about is the performance of the stock market following the, we call it breadth, right? Having that much in participation with the stock market there. So we went over a lot of things there in our Notes from Jazz email. Also talked about lumber prices, how that's going in there, and gave you a lot of stocks to take a look at in case you are wanting to participate or just, I don't know, want to know how it all works. You can find that in there overall. Now here's where we stand. We're currently, as far as earnings season, it's early. Earnings season is early here. We have 10% of the stocks reporting there, but we're currently on track to report the best earnings growth for a quarter in over 10 years. That's after a lot of companies raised their guidance going forward. As of, today, you got about 10% of the S&P reporting. All of them basically have beaten on earnings, and 87% of them have beaten on revenue. At this pace, as far as the revenue growth rates, up 30%. That would go down as the highest since 2010. So we're off to a good start, although it's early. No Name has officially lowered guidance going forward. 5 stocks out of all of them so far have raised guidance there. And here's where we stand as far as the performance of a stock. So we like to watch the performance of stocks that beat and the performance of stocks that do not beat, just to see, do they get punished or do they get highly rewarded? Well, if a stock beats on earnings the 2 days before, leading up to the 2 days after so far, we're averaging a gain of about 1%. It's the 4 days surrounding earnings there. 0.8% is the average. So we're above average in terms of stocks beating on earnings. If you find, for example, like Coca-Cola, beats on earnings, has an above average performance relative to history, if you want to see our FinTips video there for the data, that's a good thing. Right? It lets you believe that if more and more stocks, next week is big, and then the week after that will be the biggest of all weeks for the S&P reporting earnings there. If they're beating, you expect good things, but above average good things there. If they miss on earnings, they tend to fall, or are currently falling, by an average of 0.8%. The 5-year average is negative 2.5. So stocks that miss on earnings are not getting punished. So far, if that happens, you would say, that's odd, right? The fact that a stock has fallen more than 2.5% would be odd in the S&P 500. Just the kind of data we want to start expanding on. We're going to play with some different things here as we share that data with you. But nonetheless, that's the S&P, that is the Dow, that is the NASDAQ for the day. And with that, we'll go over to the sector breakdown and take a look at what's going on there. I would say kind of a ho-hum day for a lot of these areas here. If you look at financials are back to quiet. Mostly all the big names have reported earnings there. It goes down as the second largest spread between what was expected for earnings and what happened for earnings. That spread between expectations and reality, second largest spread ever there. Also as a whole, companies are reporting the largest net profit for the sector. So if you compare all the 11 S&P sectors there, the financials have a net profit margin of 20.8% after reporting their earnings. That would be the largest of all the sectors out there. So where is the biggest profits being made by companies right now? You want to be a bank or financials in there, which is kind of interesting, I think. Anyways, we go back over here. We'll take a look. You got tech. Tech down at the bottom for the day. It pulled back today basically because of semis. It is currently showing the highest year-over-year revenue growth of all sectors for earnings. That's 15.5% compared to 7% for the entire stock market. Semis, let's go over here. There we go. So we look at here. We got a little bit of a pullback so far. Not a big deal today. Semis and storage components like data storage and hardware storage are the leading industries with 20 and 25% revenue growth respectively. So if you're looking inside of there and you see today, hey, let's go over here and see some of the bigger drags today were semiconductors, maybe that have yet to report, but they are leading in terms of revenue growth of all the other industries in the tech sector. So it's likely, if you look at the stats of a stock that's a semiconductor and it tends to perform well if they beat on earnings, chances are it's going to beat by over the average there. It's a lot different way to look at it, but I just like to point out that kind of thing to test the waters. If I get a bunch of comments from people that go, what is he talking about? Then we stop. But if you like it, we continue. All right, so we've got energy here. There's not a lot to say, really. Energy's just been chopping around inside of this sideways range here. ExxonMobil and Valero were the biggest drags here for the day, as you can see. So it's still a choppy range. Like, for example, if I pull up ExxonMobil and you want to see that today was the biggest drag, that doesn't tell you a lot. Today it was weak, but there's nothing there to work on there. So that's a tough one there. The energy sector, earnings-wise, is expected to show the largest decline in revenue of all sectors there. Down 6.1% is what's expected. Remember, so far we're beating expectations there. So we'll see. And can you imagine if they just slightly beat? I mean, that could be a good little boost for the energy sector there. Explorers are the well, here, let's look at it this way. We'll go to charts here. Explorers, oil explorers and drillers, you could use the XOP to take a look at that. I just typed it in so you could see. They're expected to be hit the most with a 40% decline in revenue. What happens if it's 35% decline in revenue? They're expected to lose 40% of revenue. What happens if it's 30%? That's actually a good thing. So you would see excitement based on that, probably a lot of bullish activity. We'll see what happens. And lastly, we'll go to healthcare. So if you look at healthcare, it's the most overbought sector in the short term. So careful here. It's not the best performer in the S&P. Just in the short term, it's overbought here. Look at this short-term movement, last week and a half or so. And if I could show you today's chart of the healthcare sector, nothing. I mean, just look at the one-day performance. This is today, just today. Was it up, down? No, sideways. Right? There's not anything going on in healthcare, so a tough one to be participating in right now, especially given that nothing's happening so far. We've got earnings coming up, and it's the most overbought sector in a short term, so careful there. All right, let's go to new highs and lows for the day. Hey, that's nice. 66 stocks made new highs today. AutoZone is going to be one of them there, moving on its possibly on its second leg higher. We'll see what happens there. Remember the retail sales numbers from last week? Car parts and auto dealers. I can actually show you. So here's the car parts and auto dealers right here, down here at the bottom. Third best performing category in retail as of last month. So the money's shifting, we talked about this, shifting back to people getting their cars fixed up, going back to work. Clothing, they're getting dressed up, they're going back to work. Sporting goods, we got to drop the kids off, play soccer on our way to work, right? So it's that whole movement happening in retail sales. Well, if you take a look at new highs today, you got AutoZone, you got Advanced Auto, oh no, not Apple, Advanced Auto Parts as well hitting new highs. Did fade a little bit there, but maybe the second move going on there, you would assume that pullbacks are buyable going on to those stocks. Target, short-term little breakout here. I don't know. The breakouts are tough here, but it's breaking out. It's hitting new highs. Target's obviously done well through this whole mess, and so we'll see. Wells Fargo continuing its nice run, more than a double off the lows here, around 20 bucks now, over $40 there. So that one hitting new highs and earnings behind them as well. And then you got Universal Health Services. UHS is the ticker symbol. Look at that breakout. I still maintain it's a tough time to play breakouts, but if you have to play breakouts, maybe something there. Keep in mind, earnings on the 26th. So right now, when you're scanning for stocks, you're looking for something to play, just double check their earnings. You don't want to buy something the day before earnings and find out it's very volatile. Snap, all right, like Snap Inc., Snapchat. This week, it is the most volatile stock on earnings. Well, if you didn't know that, and you say tomorrow you go and buy it, 2 days later the thing just goes crazy and you don't know what's going on, that's the kind of thing you don't want to step into if you don't have to, right? There were no new lows on the day, so that's basically it. We've been saying that for a long time here, so we'll move on to stocks in the news if you're interested. First up, Kroger. So Kroger says, you know what? No. So in California, they've come up with this, what do they call it? Hero Pay. They say for essential workers that are out there working, we think that they should make $5 more per hour. Kroger says, no, we're not going to do that because it's going to cost us a lot of money to do that. It's actually cheaper for us to just close the stores. So they're closing stores in California, a couple different areas in California. I think Los Angeles is next. And I don't know. Where do you stand on that, right? Should they? Shouldn't they? It's a tough one. Nonetheless, the stock was up today, continues its little uptrend here after the meme stock pop that it had there a while back. If we go on over to Amazon in the news because Barron's said over the weekend that this is the one stock you likely want to buy and hold forever. And they're pretty clear with their words there, but those were their words, not mine. And so there you have it. Pfizer finally getting a move that's more consistent, up 1% on the day. They have a deal with Europe to give, I think, to sell them 100 million vaccines. It was a lot. Yeah, it was a big number. Yeah, 100 million more COVID vaccines. So Pfizer getting the deal there. And finally, that stock starting to move. Remember, there was a while where the stock was moving lower on good news. That is not the case anymore. Speaking of bad news, Peloton down 7% on the day. They say that their treadmill could kill you, so therefore don't work out. But don't give them back the treadmill. They say just hang on to the treadmill and let it sit there. We're not going to recall the product, but it could kill your dog. It could kill your children if they happen to come near it. It could kill you if you happen to come near it. So the moral of the story there is, if you have a Peloton treadmill, the Tread Plus or something like that, just don't use it. You know what I mean? Just go back to the couch, see what happens there. Tesla down today. Well, they had that incident in Texas there. They're investigating that crash. Of course, the Tesla was driving itself, and maybe the people weren't paying attention. I didn't follow it too much there. This has happened in the past. I believe there are more than 50 different cases that have been investigated. This one was pretty nasty, if you happen to see what happened there, but we'll see. Facebook also down on the day, and these guys are annoying. Facebook is kind of annoying to me. They're working to clone Clubhouse after finding out they're worth $4 billion. They said, well, we're just going to go ahead and duplicate it, and we're going to rip them off. So they're doing that. They're ripping off podcasts, and they're ripping, what was the other thing they're ripping off? They're ripping off podcasts, Clubhouse, and they're ripping off something audio. Maybe it was the podcast thing. Anyways, Facebook's whole theme these days has been somebody else comes up with something creative, we'll just replicate it. And to me, that's a little bit annoying. I don't know. What do you think about that? As far as earnings this week, got a lot of earnings. Are you ready? Got a lot of earnings coming up there. AutoNation will be one of the interesting ones. Maybe Lockheed Martin. Netflix, of course, will be the headline one tomorrow. IBM reported after the close. They beat. They're profitable again. Stocks trading where at? Let's see where IBM's at. Well, a few dollars higher, around 137 or so. So if you're taking a look over here, it looks like a gap up and out of the range tomorrow for IBM. So good for them. You like to see that. And for IBM, can I share this with you? You can see it. Here, we'll make it bigger. Put this up and out of the way. Here is IBM. This is from our FinTips video today. IBM beats 82% of the time. Revenue is not so good, but better this time. Average gap is actually down, so we're bucking the trend here, and it tends to do better throughout the day. Not a very volatile stock, but we'll see what happens tomorrow, because that would be the data based on tomorrow. Dividends, you got Lowe's paying out 60 cents, Clorox $1.11. I believe $1.11. Lennar 25 cents there, and a couple others. We'll take your questions while the stream catches up there. You got PAR joining the S&P 500. Who are they taking the place of? Who are they taking the place? Varian, was it? Oh, yeah. Okay, cool. So PAR, by the way, is a semiconductor stock, taking the place of Varian, which got bought out in the S&P 500. That should take place tomorrow, I believe. Let's see. PTC is the ticker symbol, and yeah, likely tomorrow. Look at all that volume here today. So that's what's going on there. I'll try to take your questions, see what I can do to help you guys out. Okay. Some of y'all don't like Facebook either. I don't like that model. You know what I mean? I get why they do that stuff, I guess. And if I was running the company, you'd probably have to do the same thing too, but do something original, guys. You know what I mean? That bothers me. Yeah. Tesla will be higher by the end of the week. Yeah, will they have earnings? Yep, you're right. Got earnings. Always an exciting one around earnings. No doubt. No doubt there. Why is Square taking a hit? Just pulling back. Look, is this? Yeah. So Square's just pulling back, right? This is the normal behavior of this stock. It tends to have these moves that just get a little far-fetched in the short term, pulls back. Moves that get a little far-fetched in the short term, and it pulls back, giving everybody an opportunity. Lately, this sort of consistent uptrend just hasn't been there. It's a headline stock now, so you're going to see a lot about that one there for sure. Yeah. You're looking for VIX down there at Lowe's. It's a tough one. Yeah, it's a tough one. Yeah. Oh, man, you'd have been rich with your Dogecoin there. That was probably my #1 text message over the weekend from everybody. Hey, man, what about Dojo? Or Doge? Yeah. Oh, I got you all started on that social media there. I don't like it. You think hedge funds are shorting speculative stocks? Too early to tell. You could make that argument there that that's what's going on in some of these overextended stocks, but too early to tell. We will find out. You like the semiconductors ETF? Oh, yeah, got a little limit on things you can trade there. It happens. Hey, busy week. So we will be at it throughout the week there. I will be back tomorrow to do this all over again. If you found something you like, if you learned something different, if you thought this was all a big mess, maybe you'll subscribe, come back and see what it looks like tomorrow. Appreciate it. See you then.